I can't shake the simplest feeling beyond the ghost. We stand on the opposite shore. Hello, Ramona. I reach through mysterious ceilings, my only hope. I look for the things I don't.
All right. Hello, DMV. This is Ramona Jones McClain, and I want to welcome you live to the Insurance Guru Show. If you are listening on Podbean, you can also go to our website at insurancegurumd.com. You can also check out our YouTube channel and Instagram, and you can always do the repeat. It's always there. You can access it at any time. Today, we are talking about what is a key man, and we're talking to our small business owners. And we have our special guest with us, Mr. Attorney Nick McDaniels. Hello, Mr. McDaniels.
Hi, Mr. Mona. It's so great to be here with you again. It's good to see your smiling face and great to be on the show. And I'm very, as a small business owner myself, I'm very excited about this topic today.
Absolutely. A lot of times we get really excited about starting a business and we don't have a plan to continue it. And a continuation of the business is extremely important, especially after it's been around for 10 years or 12 years or 20 years. The question becomes, how does it dissolve, or does it dissolve? Does it continue on? And in order for that to happen with ease and no arguments and everybody on the same page, because that's so important, there has to be a plan in place. A lot of these are called many different things, but basically it is a business continuation plan. And when you're looking at how you do that, one of the key factors is whether or not you are putting together a buy sell agreement which identifies who the key individuals are. Um, let's talk about the buy sell agreement. So, the buy sell agreement, there are a couple of types, right? Actually, there are like three or four types.
Mhm.
One of them, of course, is the cross sale. The cross purchase. The cross purchase agreement is when maybe there's just two partners, or there's three, or there's four. It could be six partners, and what it does is it provides money so that the partners can purchase the asset or the value of the business from the partner that is no longer there. And this could involve whether the partner is deceased or disabled or literally just wants to get out.
Correct. Yeah. So when in a partnership, a lot of people think of partners is two people because the word kind of means that in our relationships and stuff like that, but it is actually could be any number of people who have an interest in a particular business, right? And if one of those partners is incapacitated, has passed away, is unable to continue work, or simply just does not want to continue working in this business, and wants to sell their share of the asset or of the business interest, uh, we use what we call these buy sell agreements, and I like to think of them as like a business prenup. Right, in my family law practice, I write prenups and those sorts of things, and it kind of says like, look, if we ever split, this is how stuff is going to be handled, and that's what a buy sell agreement will do. Now, one of the things that you're discussing as well is usually what I think is the smartest way, or at least the most popular way, to layer onto a buy sell agreement, which is this cross purchase agreement, right? And that is where the interest, the amount of the interest of one of the partners is kind of covered by a life insurance policy on that person's life, right? So if that person
Exactly.
passes away, then the money for the other partners to be able to buy out the deceased partner's interest is covered by a life insurance policy, essentially allowing the other partners to cross purchase the interest of the deceased partner. So that's doesn't necessarily apply in situations where we're looking at a partner retiring or something like that. It's hard to get retirement insurance, but in the case of a deceased partner, which really is probably one of the most catastrophic things that can happen to a business, particularly if it's sudden, that buy-sell agreement with kind of the cross-purchase agreement, which means it's backed up by a life insurance policy that would allow the business to continue uninterrupted with the other partners, is a really smart tool for making sure that your business can continue.
And with regards to the proceeds from the life insurance, who receives the proceeds? I know it's like two different ways to do it, but
Yeah, exactly. So, I mean, it depends on how you set it up and how you set the policy up, and often who owns the policy, whether it's the business itself that is holding the policy or the individual partners which hold the policy. Typically, if it's the individual partners, that money goes to those individual partners, but they are then obligated under the buy-sell agreement to use the necessary portion of those proceeds to purchase the interest or put that money back into the business. If the business itself is the policy holder, oftentimes then that money is distributed to the business. And I think we're going to talk about key person insurance
right.
in a bit. It's a similar type of concept. And then once that distribution to the business is made, the interest or the deceased business partner's interest can be divided or transferred amongst the other surviving partners.
And and when you say they use the money to, are they paying the family of the deceased person for them to release their interest in the corporation, as far as so for example, my business is set up to transition to my daughter as the principal when I am not here. I'm evaluating now the process in which we need to do that. But the goal is that if something should happen to me, she would just step in my place and it would just keep moving.
Yeah, and there are obviously different ways that could be done, and your buy-sell agreement. And again, that's why I kind of refer to it as like a business prenup that can determine exactly how that gets accomplished. There are ways to ensure that the business interest of a deceased partner is transferred immediately to the other partners versus it necessarily being inherited, but that purchase or that buyout could go to the families. It could be just in a distribution to the families of the deceased partner. So kind of any and all of the above are potential options in structuring one of these things. You would want to talk to a trusted insurance advisor about what makes the most sense in your particular situation, and then make sure that your team of people, your insurance advisor and your attorneys and accountants, craft the best type of succession plan for you in your particular circumstance.
Right. So I asked that because we had a question that came up. What if I don't want my partner's family involved in the business after he is gone?
Right, and that's where kind of the buy-sell agreement could structure that in that way, and realistically, depending on what the nature of the business is, typically that just can't happen, right? I mean, for in my industry, for example, in the legal field, if I pass away, my wife is not an attorney, so she just can't be a partner at a law firm.
Yes, she can.
I mean, she plenty capable, but just legally is not allowed to do that, or in a medical practice, right? You can't just
Right.
have somebody's, if a physician passes away and her husband is a kindergarten teacher, well, you probably don't want him performing brain surgery, kind of with the upcoming round. So, and again, the buy and sell agreement can prepare whatever exactly is necessary in that situation for the succession of your business. And like I said, most times having a surviving family be involved in that is not something that is necessarily advisable, and the families usually don't want to. They just kind of want whatever they are entitled to for the hard work that their loved one has put in, and that's about it.
Absolutely. Of course, making sure that these discussions occur. Um, and I can't tell you when you as the person that's in your business, you're gonna have to know when is the best time. It could be the day the business starts, because you've been through this before. It could be 5 years in or 10 years in, but these particular types of agreement are essential to making sure you understand exactly what you want to do with your business long term, how it's going to continue, and understand you need an attorney to put these things in place because it is a legal binding agreement that is a part of the estate planning process.
Yeah, absolutely. And I think we're spending a lot of time talking about, okay, well, what happens to my business or what happens to my business partners or something when I pass away. I mean, in many areas of service, mine and yours, right? It's also the clientele that we have to worry about, right? If you
Right.
are just a solo practitioner or solo in your field and you're trying to think about your succession planning for your business, the other part of that is, okay, how can we make sure that everything has some continuity to it so that the business can continue to provide whatever services that the community relies on it for. And that's a huge deal, particularly for professionals or people in professional industries, to make sure that their customers or clients are continued to care for. And that's not easy, right? Even
Right.
in a partnership situation, if I pass away today, my partner, Ryan Lewis, is an excellent attorney, but he's not in a situation where he can just take on double the caseload that he's already got, right? I mean, it's just, and so, he would need to be able to hire help or hire some extra attorneys to kind of help bridge that gap to finish up any active cases that I'm working on. And the same would be true if he were to pass away. I just couldn't pick up and run with everything that he runs on a day-to-day basis. So making sure that you have the financial means to be able to continue that, so that, I mean, if you're a doctor or a lawyer or accountant or in the insurance industry, I mean, so you're not in breach of your duty to your clients.
Right. Exactly.
It's not just a, hey, you should have this. It's much more of a, hey, you must have this, and you must have
Right.
thought about these things so that you don't put yourself in a bad situation, or even worse, put your clients and customers in a bad situation.
And it also um, allows you to address not just those people you want to keep into the business, but like it can um, inhibit or keep family of your deceased partner or member or key person from selling assets or part of the business off to someone that you don't want involved in your business. Um, there's a TV show on it just went off. It's called Succession.
Yeah,
It's a
yeah,
TV series on HBO, and it's literally all about this father who's got four children, and he doesn't want to admit that he won't be here,
right.
or is unwilling to decide who shall succeed him. And the entire series is literally about his children pigeonholing him, and basically trying to take the business from him. I think it went on. I think the last season just ended where he passed away. And after everything that went on, the oldest son was named in his um, will as the person who should take over. After he threw the oldest son under the bus, made fun of him, made him look crazy, just all kind of stuff, just the whole time. And he already had it in his will and he didn't change it because he literally thought he would be here forever. But one of the things that he put it in there is, and for example, my dad was on the show last year. We talked about my grandmother, and part of the thing that exists in their family succession plan is that the land cannot be broken up or sold off. that the land that they own for their farm is maintained, and it can only be sold to or managed by a descendant of Joe and Gertrude Jones. And that is built in so that the estate per se stays intact and is maintained, because it took them such a hard time to get it and keep it for all of these years. It's been over 100 years now, and that was part of their plan in deciding, okay, well, you all can do this, this, that, and the other, but you cannot sell this to that person, or you can't break these parcels up and sell them off one by one.
Sure. And I mean, we've talked on many episodes in the past over the last few years about the importance of estate planning and trying to avoid messy conflicts and fighting within a family. As much as you try to avoid those things, one of the things that we always talk about is, well, it still happens, right? And when you're dealing with a business situation, and particularly a partnership, you don't want your potential messy family situation to impact all of your partners, and you don't want your problem to become their problem. And
Right, because that's easy to happen real fast.
oh yeah, absolutely, especially because for many people, I mean, typically a home and an interest in a business are going to be two of the largest things that you potentially have in terms of assets at the time of death. So if
Right.
we know where there is money, there is often fighting, and having a plan to make sure that this is dealt with on the front end is something to at least, again, make sure that your problem doesn't necessarily become the problem of your partners.
Exactly. So let's talk about key people. What is a key person? Um, is
Yeah,
the
I mean, it is what it sounds like, right? I mean, it is, if that person is not there in a business, the business will struggle to operate, right? And if in my business or your business, like in your business, it is you. You are the key person. You are the one that if you are not able to come to work to do your job, your business will not operate, and unless you have proper succession planning to be able to keep that
right,
moving. You are certainly a key person. In the case of my law practice, Mr. Lewis and I are key people. Without a doubt, if one of us is unable to be there and to operate the business will struggle to continue its function. Same is true for other professional practices, but
right,
also other businesses. If you are a contractor or a plumbing business, or I mean, anything where there is a certain degree of knowledge and skill that without you being the person that holds that knowledge and skill, the business wouldn't be able to operate. These are key people.
and a key person can also be an employee,
Sure. Yeah.
or
Yep.
or executive, or somebody, especially if you are in a situation where you're in a second generation family owned business, but the family is not running it day to day. They
Correct. Yeah. Larger businesses, right? I mean, they're
Right,
even larger businesses that are publicly traded, right? I mean, they are owned by shareholders
right,
and people. But if the CEO or the COO or something like that suddenly passes away or becomes incapacitated, that can cause catastrophic ripple effects throughout the entire organization. So I know
yes,
you and I are small business owners, and my brain kind of typically goes in that direction. But for
yes.
larger companies, I mean, you could have dozens of key people
Well,
that.
there are a couple of small businesses actually in this area. Genova's to go. They have, I think, 7 or 8 stores where the family still owns it, but they're not the ones really running the day to day. And Hip Hop Fish and Chicken, well, they're a little bit bigger. Um,
Yeah, but I mean, they've got 20. I mean, they're still a local, regional
yes, they
kind of
are.
that have grown and continued to grow, and it's good to see their growth. And listen, I love that lemon pepper seasoning, a little extra crack on my chicken box, is something that I'll never turn down. But yeah, I mean, the same situation, and they would have multiple key people. I mean, even so much in a non-franchised restaurant chain, like I and I don't want to pretend to necessarily know the organizational structure of the two businesses you referenced, but I assume that neither Genova's nor Hip Hop are franchised. It's possible that the manager at each location could be
Right.
a key
A
person.
key,
Correct.
exactly.
Yep.
Exactly. And that way, if something, because I don't know if you notice about Genovas, they literally take a company wide week off at the end of July. Like all of the stores are closed for a whole week.
I didn't know that. Maybe I just never tried to order their pizza that week or something
It's
like
just the
that.
craziest
I
thing. Like
definitely love some Genovas. Yeah.
we went to get spaghetti and meatballs, and there's a note on the door. It says, "Hey, we appreciate your patronage, but we're taking a hard-earned vacation, so we're calling the other locations. Every last one of them are closed. It's the craziest thing."
Yeah, no, and that's, I mean, well, I think that answers the question of probably how their corporate structure is, right? But
Yes.
certainly, then they would also have multiple key people that are probably running each of those locations. I mean, that's how
Yes.
they're keeping everything so tightly organized and have kind of this top down corporate structure to where even vacations are the same. So that's great.
Yes, but in that understanding, when you purchase what is key person insurance, you are ensuring the value that that person brings and what the economic or financial impact is going to be if they are all of a sudden not there. And this can include not just life insurance, but disability insurance,
Correct.
as they are identified as having a financial impact on your business, whether it is for me, it would be my top producer,
Yep.
and the one that has had the longest tenure as far as being in the agency, and especially if that individual is part of my succession plan, because your succession plan can also include allowing an employee or the employees. I can't remember the company. I think it was out of Michigan, when the owner um was getting ill. I think the owner had Alzheimer's. I can't remember. So much information rattling around in my head. Um, I think the owner had Alzheimer's, and what they did was, when the early signs started, they got life insurance, and the company, the union, I believe, purchased life insurance so that if something should happen to the owner, the employees were able to buy the family out, and the company became employee owned. And I can't remember what it was. It wasn't like an automobile, it was some other kind of business. But that is also an option when you create your succession plan, so that your employees can now become owners of the business and develop their own as they move forward, especially if they help you build it from the ground up.
Certainly, yeah, and those employees, or at least many of them, would probably fall into that key person category, right? And
Yes.
uh, one of the things that we should remind people too, with kind of key person insurance, or thinking about insuring certain individuals in the case of their death or disability within your business, and the financial impact that would have, is that people could have different levels of key person insurance, right? Is that
Yes.
partners or high level executives may have, uh, or probably certainly would have, higher levels of key person insurance coverage, but there also may be director level positions within an organization that are going to have slightly different or slightly lower levels, but you still want to make sure that that's covered. And one of the things we need to talk about is, what does that cover? What's that for, right? And one is the initial financial impact. If you're in a
Yeah.
sales business or something like that, and you will immediately start losing sales or production, something
Absolutely.
like that, right? And so that's
Right.
covered for that loss, but it's also to cover hiring a replacement, or figuring out what you're going to do to restructure your organization to make up for that loss of that person. So it's important not just to stop your business losses, but to make sure that you can also get the business back on stable footing again after somebody either passes away or becomes disabled.
Absolutely. We're going to take a small break, and we'll be back in like 1 minute. Okay.
Hello, DMV. This is Ramona Jones McLean, your insurance guru. I am a farmer's agent located at 11707 Reisterstown Road in
Hello, Farmers
Reisterstown,
Insurance.
Maryland. Here, you can call me at 443-660-7131 or listen to my show every
Yeah.
Thursday at 3 p.m. at podbean.com.
Yes, you did.
The
As soon
real
as I get off
insurance
the
guru.
air, I will give you a call
I
back.
look
I understand. I need you to give me. I'm the only one here today, sir.
As the road you travel changes, so can your insurance need. Talking with Farmers Insurance Agent Ramona Jones McLean can help you assess whether you're ready for the journey ahead. Call Farmers Agent Ramona Jones McLean today at 443-660-7131. That's Ramona Jones McLean at 443.
I need you to give me 20 minutes. All right. Thank you, DMV. Thank you. We are back. And we got a question. Let me see. Oh, right here. Here's one that's coming in. It says, does it matter how many partners are in a buy-sell agreement?
No, I mean, not at all. I think the only thing that would probably matter is that you would want all partners. So,
Yeah.
So if the question is, you've got a partnership of 4 people, what if only 3 people are in the buy-sell agreement? That would take a lot of convincing for some client to convince me that that's the appropriate thing to do and what the rationale is for that. I think it's very important that all partners are involved in the buy-sell agreement. So however many you have, that's how many should be part of the buy-sell agreement.
Okay. And let me see here. Oh, this is a good question. Okay. How do I know how much insurance to purchase?
That's a great question. A lot of times, whoever your vendor is that you work for your insurance coverage will have a practice or internal policy for business appraisal. I mean, you may not need the full, depending on the size of your company and how complex it is, you may need a full business appraisal. But typically, along with the underwriting process for this, there's at least a smaller, shortened appraisal process your insurance company will go through to help advise you as to that particular amount. Ms. Ramona, I'm sure with any products that key person products that you offer or create, there's an appraisal process that Farmers goes through, I would imagine.
Well, there are a couple companies out there that can do a business appraisal. It depends on, honestly, your preference. Usually what Farmers does is they take the annual income of the business and they do an average over 5 to 10 years, depending on how long the business has been in force. And then that's how we determine what the value of the business is, especially depending on what the buy-sell agreement is looking to replace, whether or not it is trying to just replace this person's salary or the value that this person brought to the business, or if we're doing a buyout, as far as are we projecting what how much money should the family have received over the next 5 years or next 3 years. And so they look at the annual revenue, the average annual revenue over the last 5 to 10 years, and then that's how they determine how much coverage should be in place as far as what we are going to do to provide compensation to the family after their member is gone.
Right. And so that's not nearly as in-depth as a full business appraisal would be, but it does, you're essentially relying on the professionals within the insurance industry to know how these things typically get done, how they typically work. And that's kind of a shortcut method for appraising value, which is very helpful, because a full business appraisal, while I think it is worth it, is fairly costly. And so it's something that you definitely want to make sure, depending on the size of your business, whether that cost expenditure is actually worth it. in order to get
Exactly. I would say that if the business has a lot of assets, including property, vehicles, and other things, I would definitely go for the appraisal. If it's really just revenue, um, the formula may work. It is really your preference and what you are expecting or you think your family should receive. But definitely, if there are other like physical assets involved, you probably want to go for an appraisal.
I agree.
Because
I think that's great advice.
yeah, you want to make sure that because when there's a dissolution of a marriage, you selling property, you're selling vehicles.
Right.
You getting things out of individuals' names, and so it makes a divorce a little bit more complicated than just saying, "Oh, you owe me alimony, and you're going to pay me alimony until Sarah is 18."
Right.
And, and
Right.
and speaking of that, that is another option in a buy-sell agreement with respect to um, giving the family compensation. It could just be an annual income or a monthly income in addition to whatever the life insurance is, especially if it was done in year 2 of the business and now in year 20 the business is worth 6 times more than it was when and those things you run into as well, but you can build contingencies into the plan, in addition to the plan being reevaluated every certain amount of years. And that's the other thing with these plans that are put in place. Quite frequently, um, we get them and they're just stagnant, but life isn't stagnant. You have to, every 3 to 5, you should be looking at your life insurance. You should be looking at what you thought was enough at that time and reevaluating, is there more that needs to be done? For example, when I started my business 10 years ago, I didn't own a building. I didn't own a vehicle in the business. I do now, and now I need to reevaluate how do I have enough? What direction is my business going in? What plan do I need to put in place, and how do I need to do that to make sure that if something happened, all of those things do what I intend for them to do and what is acceptable in order for my business to keep going.
Right. Right. No, again, just very sound wisdom, making sure that all of this is updated, that your succession plan is updated, that you immediately go through that process again once your succession plan may have to take effect if you happen to lose a partner in your business or something like that, to really regularly refresh and reevaluate your succession planning, your buy sell agreements, your insurance coverage, and all of that, along with your attorneys, accountants, and insurance professionals.
And understanding when you put these things in place, there are several different ways to fund them. The business can fund them, the individuals can fund them. What this means is that there's not like a set formula. It means that you really do have to talk to the professionals in order to figure out what is the best fit for you in your situation as your company grows and as your business grows and you move forward. It's just so important to do this, mainly because we've had the shows on last year where someone has passed away and it was just chaos.
Yep.
Yes, it's just people are fighting. I had a lady on one on last, I think it was last March, on our wills show where the father had a will. She was supposed to be the executor of it. The day of the funeral, the brother is at MVA retitling the truck in his name.
Yep.
Okay, and she's got to go through so much to reverse this because the truck was supposed to go to the younger sister as designated in the will. Legally, I mean, financially, does the estate even have enough money in to fight this? Is it even worth it? Or maybe it is to keep people from doing it in the future, or for him to actually pay the younger sister for the value of the truck that he technically stole. He stole it. How he got the death certificate, I have no idea, but I assume, they were all planning the funeral together. So I'm assuming he got the death certificate because he was in the room. But at the funeral, they're going to the repast, and he's at MBA.
I mean, look, you know me. I wouldn't miss a free meal just to go to the MBA. But in all seriousness, I mean, that goes to our bigger point, right? Is where there is money, there is always drama, and making sure that you can at least keep the collateral consequences of that drama away from your business and your partners and your customers is definitely to your benefit, and certainly probably to everybody involved.
And just to break, this is not a complicated thing. The first thing is to identify who the key people are in your business and who has the value that you want to protect. That's step one. Step two is decide what you want to do. You have to come to an agreement. It's called the buy sell agreement. You need to agree, which requires a conversation and a discussion on what is the end game for what you have built and invested in. These conversations can happen over several months, over several years, but not before someone passes away. So therefore, that puts a little timetable on it. You need to decide where you want your business to go. And that's step number two. And then step number three, what it is determining what is the value, what is the current appraised value or assessment of what your business is and what you are protecting. And honestly, I'm going to be honest with you, and Mr. McDaniels brought it up. You don't want to bring your family mucky muck into the business scenario. So honestly, a lot of this, even though as a spouse, you want to have a discussion with your husband or your wife, but the real discussion is with your work husband or your work wife or whatever, vice versa, because ultimately you guys are the makeup of the business and you all have to decide what is going to be the best scenario in the end game. And I've seen this before. Wives and husbands may not agree. They may think they're supposed to get this, that, and the other, but fairness is key to coming to an agreement. And as long as it's fair, then you just have to get there.
Absolutely. I love that advice.
Yeah, well, Mr. McDaniels, we are going to wrap it up. Please give the audience your information.
Yeah, thank you so much again for having me on. Good to get back in the swing of these, and hoping to be on a few more times this fall and even more into 2024. Nick McDaniels, I'm an attorney. We've got a main office in Frederick and practice quite a bit in the greater Baltimore metro area. My partner, Ryan Lewis, is an excellent attorney. We can be reached via the World Wide Web, www.lewismcdaniels.com, and you can give us a call, 301-818-0405. That's 301-818-0405. Thank you so much for having me on again, Ms. Ramona.
Absolutely. I am so happy that you could be here. And I hope that the new format is going to work well. We are working on it and rebuilding our audience and putting it together. It's going to be all good. It is absolutely going to be all good. And listen, if you have any questions, give them your number again, Mr. McDaniels.
Sure, 301-818-0405.
Yes. And if you have any questions, please call us 443-660-7131. Thank you so much for being part of our show this week, and we are out.
Hello, Ramona. I can't shake the simplest feeling beyond the ghost. We stand on the opposite shore. Hello, Ramona. I reach through mysterious ceilings, my only hope.